Hello, everyone. Thank you all for joining us today for our How Vendor Contract Management Benefits Your Credit Union webinar. My name is Abby Clark, and I will be your host. On your screen, you should see multiple widgets that you can use, including Ask Question, Media Player, Slides, Related Content, Speaker Bio, Request Demo, and Help. If you're not familiar with our webinars, all the widget boxes are resizable and movable, so feel free to move them around to maximize your screen space. At the bottom of your screen in the toolbar are icon buttons you can use to show and hide those widgets. You can expand your slide area or maximize it to full screen by clicking on the 4 arrows in the top right-hand corner of that widget. If you experience any issues or have technical questions, you can use the Help widget or submit them along with any other questions through the Ask Question widget. Don't worry, we do capture all questions throughout the session. We will be answering some during the webcast, but those that we do not have a chance to answer live, we will address with you via email. Today's live session is eligible for 1 CPE credit. If you wish to receive this credit, please remember to answer all of the polling questions that will appear on your screen during today's presentation. You will also be sent a follow-up survey link 24 hours after the live session that will need to be completed as well in order to receive the CPE credit. With us today, we have Kelly Vick, VendMinder's president. She will discuss vendor contract management in more detail, including elements that should be considered and the benefits of vendor contract management, as well as how it will help your credit union successfully monitor and maintain vendor relationships. You'll also see a link to a copy of today's slide deck, a link to our website, a link to our samples library, links to our benefits and best practices of midterm vendor contract reviews infographic, our vendor contract renewals checklist, our How to Master Vendor Contract Management ebook, our guidance and regulations on third-party risk management ebook, as well as a link to our additional resources, all within the related content widget. With all that being said, I would like to hand it over to Kelly. Kelly, the floor is yours.
Thank you, Abby. So for today's session, we are going to dive into details around vendor contracts. We're going to talk about why vendor contract management is so important. We're going to take a look at who should be involved in that process, what elements should be included in your contracts, what service level agreements are, and we'll talk in depth about that, and we'll end talking about some best practices. We're going to start by talking about where vendor contract management sits within the third-party risk management lifecycle. So we'll spend some time actually reviewing the lifecycle in depth as it relates to contract management. So let's just go ahead and jump right in. As you can see on the third-party risk management lifecycle that you are looking at, contracting is part of the onboarding stage and actually is the last step within that. That's because during onboarding, you have decided on what service and product you need and have narrowed down your vendor choices to a short list. And during that process, you've also performed a risk assessment on the solution being provided by each of them, and you have done the appropriate amount of due diligence to mitigate any risks that you've identified. So now you are ready, you're at that last step in this onboarding to process contract management with your chosen one, or all of them in your short list. So this is the last step. And if you could look further, last step in onboarding, that is. If you look further into the life cycle, you will also see that contract renewals is in the ongoing stage in the life cycle. And then also contract management naturally lives in the offboarding stage as well, because you have either reached termination with that contract or you have decided to terminate early. So let's keep moving through the slides and talk further about contract management. As I just mentioned, you will either choose to work through the contract management step with one vendor that you have chosen or with all of the vendors that made your shortlist. That decision will likely depend on the product criticality, and I would imagine on the cost of that product as well. And whatever you established in your third-party risk management governance is the process you should follow. So whether you're doing this with one or more, These are simple steps to putting a contract in place with your third party, or anyone for that matter. First, let's chat about negotiation. Negotiating the terms of your third-party contract is definitely a best practice. There may be times where little negotiation or none possibly is needed, but you should go into each contract reviewing all of the language and agreeing on the language that is right for your credit union. Negotiation is a give and take. Both parties have to go into that process realizing that there's hills to die on and there's hills not to die on. And in that process of negotiation, you will draft contract language. When you can, you should lead with your contract template. That's the best way to ensure that you get the language that is most suited for you. And your legal department or outside legal counsel, whichever it may be, needs to be involved in this process, especially when you are not able to lead with your contract template and you're starting with language that is very unfamiliar to you. Once you have agreed on the terms and you have drafted that contract, then comes execution. I've seen the contract closing get stuck here too many times. So be sure you've identified early in the process, if this contract and product or service is important to you, what is the execution process on both sides? Who needs to execute? Who will initiate? Is e-signature acceptable? Et cetera, et cetera. Don't let it get stopped here. And lastly, but certainly not least, have a centralized place to store this contract that you just signed. With your third parties, there's no better place than a vendor management system that includes a contract management module, such as VendMinder. There's others, of course, but no harm in mentioning our name here. Okay, so very simply, again, negotiate, draft, execute, and store. Now you are in business. Contract management in the ongoing stage takes a different view than in the onboarding stage. Oversight management of your vendor during the ongoing stage also includes oversight of the contract. That looks something like this. Throughout the contract, you should be monitoring the third party's performance against the contract requirements. For example, if service level agreements were included, a task to routinely review the performance against those SLAs is a best practice. Most likely, the vendor owner or procurement would be the one tasked with this responsibility. There's other things that should be monitored, though, as well. Things like insurance requirements, reporting requirements. Maybe you even have some audit requirements in the contract. Definitely price increases or changes. Those are things, just to name a few, that should be monitored throughout the life of the contract. There also may be times that a modification or an amendment is needed while the contract is in term. Situations like a change in service, a change in performance, and now you want to require an SLA, maybe you didn't have one, possibly a new regulation like all of the recent privacy regulations that have come out. Again, this contract is a two-way street. So either party could really be the one to require or request a modification or amendment. And throughout the contract, as you identify issues with the vendor, whether it was SLA related or maybe uptime related, which is probably also SLA related, something impacting their regulation, maybe their financials have gotten weak, whatever the situation or the issue is, you need to have an issue management process in place to monitor those as well. The end game is either the third party's issue improves or possibly you choose to terminate the relationship early if it doesn't. And contract oversight also includes the renewal of that contract. If you don't want to get caught in an automatic renewal, be sure you are monitoring the notification period. And this is also the time to renegotiate any terms in the contract that are no longer suitable to you. So the moral of this story is the contract process is not a one and done process. So what is vendor contract management? Well, we've talked about most of what's on this slide just in the last two slides, so I won't repeat all of it. But again, vendor contract management is the oversight of that written agreement that you have with your vendors that provide your credit union with a product or service. And it includes all these things we just discussed, negotiating those terms, incorporating essential controls, making sure you have a process in place to review, approve, and execute that contract, and then that ongoing managing and tracking of your contract by making sure it's stored in a good place, that you're monitoring those termination dates and renewal dates, and that you have somebody tasked some process tasked with ensuring that SLAs or other performance issues are managed and reported on and tracked against with those contracts. So we've spent a lot of time talking about what contract management is, but let's spend just a few minutes talking about why it is so important. The contract is with your third party, really any contract, but in this case, the contract with your third party is that single most important tool that you have to directly influence and control that relationship with that business, with that third party. Not only is it legally binding, but that whole process of negotiating and establishing that relationship with that vendor sets the tone for the relationship going forward. Contract management ensures that both parties have appropriate controls in place within the contract. It brings visibility and transparency for you into company spend, and it could possibly even help you save some money in the long term if you have a good process in place for overseeing contracts. Planning ahead and inserting appropriate controls within the contract. Hopefully you found those in some risks that you might have identified in the due diligence process of reviewing that vendor, and so you want to get those controls in place in the contract. That's another reason why it is very important. And then managing that process or that contract is absolutely a requirement by the NCUA. And it's also important to remember that this written agreement is really your most powerful leverage in that relationship with that vendor, should any kind of change during the life cycle of that relationship with that vendor be necessary. Who should be a part of the contract management process? You can see from this slide here that there can and should be several areas or departments involved in this process, both in planning, negotiating, and executing. Having this many departments involved in the process isn't necessarily a bad thing, although it might look like it, but it does require your organization's third-party risk manager or whomever has that overseeing authority to set and enforce the standards and processes or the rules of engagements covering topics like who can author contracts, what requirements should be in place, what provisions must be included, et cetera, et cetera. These items definitely need to be identified in your third-party risk management governance document so that everyone in your organization knows what is expected of them when they are involved in the contract management process. So earlier I mentioned that a centralized location for maintaining contracts is a good idea, a best practice actually. A centralized contract management process is also a good idea. And again, I know it's not a popular process. You know, I understand that and experience that as well. It can often be seen as a bottleneck or a growth roadblock, but having the process of contract management centralized doesn't mean that people can't be involved, that there won't be key stakeholders involved. It just means that there is a process and that somebody is managing everyone to that process to make sure that those who do need to be involved are involved. So as you can see, I've listed primary constituents and collaborators. Of course, this could be different for every one of you, so don't take this as, of course, the blueprint. It's just an idea. The point that we're making is that use those governance documents, as I mentioned, to make sure that you define the right process for your credit union and ensure that everyone knows that process so the right people are involved. I've also listed on here who should be involved in drafting the SLAs, and we're actually going to talk about SLAs more in slides to come, so I'm going to hold that thought for when we get to that slide. Okay, so we've talked about the what, the why, and the who of contract management. Let's take a look and dive into some details within the contract language. So on this page, what you're looking at are the major elements or contract provisions that should be included in all vendor contracts, regardless of risk, regardless of criticality. These are just common contract language that needs to be included. Each of these provisions should be clearly outlined in the vendor contract. It's also important to understand that your regulatory bodies, the NCUA and others, are specifically looking for these as well. So what does that include? It includes the scope of service and the expectations of that service that is being delivered, of course, costs associated with that service, including potential price increases or limitations of price increases. Termination provisions that could include, automatic renewals, notification periods, terminations for breach or termination for convenience, any types of termination provisions. It's definitely going to include some language around information security and confidentiality provisions. What does confidentiality mean? What's considered confidential? How are both parties handling that? Indemnification provisions, including what's scoped in, what's scoped out, liability provisions, ensuring that there is a minimum liability or maximum liability cap and some exclusions of what's not limited to liability. Default and remedy provisions, so is there an escalation path identified in the contract? Warranties and reps, what are each party's warrantying and repping to the other? And then, of course, ownership and license of whatever it is you are purchasing. So as a credit union, it's easy on you in some regard in that the regulations require certain things to be included in the contract. And later on in the presentation, I'm going to speak to some specific places that you can go find that. But as far as you're concerned, credit unions, there is no doubt what needs to be included in your contract because your regulators tell you exactly what needs to be included in there. Now, it doesn't give you the specific language, but it does tell you what elements must be included. So all of these elements are important, and you should ensure that your legal team has adequate time to review the language in the contract to ensure that each of these provisions are included. It definitely takes people who understand the regulations and who understand the meaning of each of these provisions to ensure that they are captured correctly with the contract that you are reviewing with that vendor. So this is probably where you would involve your legal team or your outside counsel, whichever the case may be. So now let's take these additional provisions a step further and talk about some that should be included for critical and high-risk vendor contracts. So again, the previous slide were the essential provisions that are going to be included in all slides, or all contracts, excuse me. But when it comes to your critical vendors or your high-risk vendors, there are others that are very important that you include. And this slide incorporates a number of them. There could be others, but let's just start with these and say these definitely need to be included. So let's just run through them. One is provisions for performance standards or SLAs. And again, we're going to talk about SLAs in this presentation, but just know that for critical and high-risk vendors, you would want to ensure that service level expectations are included so there's no mistake what is expected from that vendor. Some expanded security and confidentiality as it relates especially to privacy laws, HIPAA possibly, or GDPR or GLBA or CCPA, all of those acronyms that define the privacy regulations of the various states and countries that you're working with and contracting with. All of those regulations are out there to ensure the security of the non-private or non-public information, non-public information that you have on your members. You will certainly want to make sure that you are addressing that in the contract language very tightly as it relates to the confidentiality and security of that information. As well, because you're buying a service or product from a third party, and the chances are they're working with other parties to provide that service, which are subcontractors or otherwise you're a fourth party. So you want to make sure that you have language in your contract with your third party that they are managing their third parties as you are managing them. So ensuring that there's provisions in there to address that is definitely a requirement. And then you want to make sure that you have some provisions in here to ensure that you are that you have access to third-party compliance documents from your vendor, and even down to your fourth party possibly, and that you include some audit rights. So remember, keep in mind, this is a critical and high-risk vendor, so they are critical to your business and they have access to your members' information. So you are wanting to make sure that they have a strong third-party risk management program in place as well. You also want to have some provisions to address business continuity and disaster recovery, and you want to ensure that you have rights to their testing, that they are testing, that they will give you the summary, possibly even be included in that testing. If they are a foreign-based third party or there's any type of foreign relationship with them, you want to address that. And then there's some other miscellaneous controls that you may want to include, like maintenance requirements or change management, and insurance requirements for sure. The chances are you will have some minimum insurance levels that you would expect for these vendors. So this list, as I said, may not be exhaustive, but it is certainly a good start for the provisions that you should have in your contracts for those critical and high-risk vendors. So let's take a couple of moments and talk about some common mistakes within vendor contract management. If you can, try not to let these happen to you, because regulators and auditors are looking for a well-developed and organized program. So they'll most likely find issue if they come across any of these items. First and foremost is that you signed a contract without any documented vendor vetting. So going back to the very beginning, looking at the third-party risk management lifecycle, that's the first thing you're doing as you are looking to evaluate vendors and the products that they're selling and the services that you are interested in. It is truly a best practice and really a must as it relates to the regulations that you are following to vet those vendors, to evaluate more than one vendor. And your regulator is going to expect to see that you performed a risk assessment, that you have due diligence on file, and that you reviewed all of that before signing a contract with a vendor. And other than the fact that your regulators are going to be looking for it, it's just good business sense to do that. They're also going to be making sure that if your governance documents require some level of approval, whether that's senior management or board approval, that you are gaining that approval step prior to executing a contract as well. So be sure you know what your third-party risk management governance program requires and follow that. A decentralized contract process is the least desired approach. So your examiners are going to be looking to see if that's what you indeed have in place, because decentralized often means that there's too little control over things like contract terms, tracking, and really just no central point of control or location. So a centralized approach is certainly best. Contracts that aren't being tracked properly for important dates, or like an auto renewal, those are things, or maybe even automatic price increases. Some contracts would include that. So hopefully you are tracking all of these key dates within your contracts as well. They're also going to be looking to make sure that roles and responsibilities are clearly identified. That's, from my experience, a piece of the contract that is not always handled well. So be sure to have good roles and responsibilities identified in that process. And they're also going to be looking to ensure that you are performing vendor performance reviews, which should include a review of the contract, and we've talked about that a little bit as well. So be sure to make a review of that contract on a routine basis, at least annually, maybe more than that, especially if there's SLAs involved, and don't let a contract auto-renew unless you intend for it to auto-renew without having done some type of vendor review. So again, these are just a few common mistakes to try and avoid.
And this brings us to the first poll question of the day. You should see the poll question now in the slides area. If you have any issues, please feel free to send us a message using the Ask Question widget, and we will be happy to assist. As a reminder, if you wish to receive the CPE credit for today's session, you must answer all poll questions and be in attendance for the entire live session. This poll question is, in your credit union, where does contract management sit? Which line of business or function? Compliance, risk management, executive management or the board, information technology, general counsel, inside a line of business or department such as marketing, operations, or branch management, or you're not sure. And Kelly, it looks like right now we have some time to answer one of the questions that have come in so far from the audience. And that question is, what are the chances that one of our vendors would agree to renegotiate a contract that is mid-term?
Well, Abby, that's going to depend on the relationship that you have with that vendor, possibly even the product or service that you have with that vendor. But the chances should be, if it's a good relationship and if the request to renegotiate it is a fair request, then it should not be met with much resistance. I've seen that happen in situations where maybe a regulatory requirement possibly, or just trying to just strengthen the contract with some language around maybe SLAs. Maybe you didn't put SLAs in the beginning, and the performance of the vendor has slightly deteriorated, so you're asking to put SLAs in place. So there could be a very valid reason. I think the most important thing to note is that the greater the relationship is more like a partnership, the more likely the vendor's willing to work with requests like that.
And thanks everyone for answering that poll question. Here are those results. And by the way, you may have noticed reactions such as a thumbs up or heart coming across the screen. If you find this feature distracting, you can turn it off by clicking the 4 arrows in the top right-hand corner of the Slides widget, which will expand the slides to full screen and no longer show the reactions. And before we move on, as a reminder, in the Related Content widget, you'll find a helpful resource to reference, which is our Benefits and Best Practices of Midterm Vendor Contract Reviews infographic. With that, Kelly, back to you.
So we've covered contract management pretty thoroughly. So now we're going to shift our attention and talk about service level agreements in further detail. So we'll cover SLAs over the next several slides, but I want to first make sure we talk about what an SLA is and be clear about what it is that you should expect with an SLA. So what is an SLA? Well, it is an agreement that clearly spells out the performance expectations and how that performance will be measured. It's really plain and simple. However, it's a very complicated document to write. Complicated in that you really want to make it as simple as possible, which sometimes makes it complicated. A service level agreement should be a key component of every contract with your third-party vendors that are critical to you and present a high risk to you. You may try to include them with all of your vendors, third-party risk management vendors, but for certain they need to be included with your critical and high-risk vendors. In addition to defining what's expected, the SLA should also detail how the service is to be measured. So not only, what you expect of them, but how they're going to measure it. and if they don't meet those expectations, what your remedies and penalties are if they are not met. So again, I think the critical thing to point out here is that an SLA establishes what you expect as far as performance goes with your vendor on that product and service that you have purchased from them. So we're going to talk more about this in the coming slides. Let's talk about why SLAs are important. Well, as we already mentioned, SLAs define how your vendor's product or service is expected to perform. An SLA helps provide you some peace of mind that the vendor knows exactly what you are expecting. It also gives you some peace of mind that those of you in your credit union who is monitoring that vendor and the performance of that vendor knows what to expect as well. So if they are established properly, the SLAs can help drive efficiency between you and your vendor so that both parties, again, know what's expected, know what's to be done. The SLAs are generally focused or centered around your customer's experience and the service that they are going to be receiving from that vendor. So meeting those SLAs are a key element in your satisfaction with your members. So said differently, your vendor's performance is a reflection of your performance. So for that reason, those SLAs are also very important. It's also very important to establish measurable standards and to identify the most important ones to measure. I speak from experience when I say you can become cumbersome with writing these expectations in your SLAs and especially measuring and reporting on them. So don't let that happen, because the more cumbersome it is, the harder it is to truly track and monitor. And if the SLAs aren't being met, the remedies or the penalties that you established in those SLAs, hopefully you established them, are there so that you do have some options as it relates to the vendor's performance and if it doesn't improve. So it's important that those penalties be identified in the SLAs should it come to that. And another reason that's important is because monitoring these SLAs for your vendor's performance can provide some early warning signs if there are bigger issues that could be appearing through those SLAs. So if you're not already doing this, now is the time to pay close attention to the SLAs in your vendor contracts. Just like when drafting the contract, there's multiple people that are involved. Same is with SLAs. There should be multiple people or departments involved in this process as well. On both sides, there needs to be folks within your credit union, especially, again, the business owners, people working with this product and service, as well as the same on the vendor side, because they need to work with you in drafting that SLA to ensure that they are committing to something that they can perform on as well. Legal team may be involved in this, although most of the SLA is around business language, but again, you should probably ensure that legal is a part of it as well. And of course, your third-party risk manager or procurement, whomever is in that role, needs to be involved in this process as well. So again, not unlike the drafting the contract, the same would be with drafting the SLAs. There should be multiple people involved to ensure that it's a good understanding of the SLAs and how that vendor is to perform and to be monitored. So since I've mentioned a few times about how important SLAs are, let's just take a deeper look into what should be included in an SLA. The most important thing, again, is to make sure that multiple people within the organization are involved so that you can ensure that all of these important elements are included. But what's most important about the SLA is ensuring that there's definitions of some key terms in there so that, again, it takes away the ambiguity of how something is being defined and monitored, the expectations or goals, how it's going to be measured, the timing and frequency of how often it will be measured, the responsibilities of both parties in that process, what the monitoring process is, how you're getting reporting on it to know the performance, What happens when there is an escalation or disputes happen? Is that procedure identified? And as well as that, what is the response and issue resolution time for when escalations and disputes occur? And then, unfortunately, you need to ensure you include this in there, but in the event that the SLAs are not met over a period of time, you would want some termination provisions, some ultimate remedies that result in termination as part of the SLAs.
Our second poll question of the day is, do you ensure your SLAs are integrated within your critical vendor contracts? Yes, no, or not sure? Kelly, I have another question here from the audience that I think we can go ahead and answer. And that question is, why is it necessary to include a glossary of terms in a contract or agreement?
Well, from my experience, one of the biggest sources of misunderstanding between two parties in a contract is that they each define terms differently. Not every term, of course, but there's certain ones that can easily lead to ambiguity. So whether you have an actual glossary or a section in the contract for definitions, or whether you define it throughout the contract, it doesn't matter which way you do it, but it is very much a best practice in that contract agreement to have key terms defined. You know, and those key terms can be customer, availability, uptime, acknowledgement, I mean, just problem resolution. I mean, there's all kinds of terms that need to be thoroughly defined to remove any ambiguity that may exist between both parties. So again, as a best practice, be sure to define key terms throughout the agreement.
Awesome. Thanks, Kelly. We will be closing this poll in just about 15 seconds, so please be sure to go ahead and get those answers submitted. If you have any issues with submitting your answer, please send us a message using the Ask Question widget, and we'll be happy to assist. Okay, here are those results. Thanks again, everyone, for taking the time to answer the poll. I would like to quickly direct your attention to the Related Content widget, where you will find our Vendor Contract Renewals checklist. Okay, Kelly, let's continue with the presentation.
Continuing on talking about SLAs, when should you actually begin reviewing an SLA? Well, first, the SLA needs to be thought about during that due diligence process when you're selecting that vendor, because that's when you've identified key information about that vendor that you want to monitor of their performance, whether it's service related or vendor related specifically, whatever it may be. So you're going to start thinking about it in the due diligence process. But then you're going to review them at the contract stage, of course, because that's when you're going to put them in place. And then as a best practice, they need to be monitored ongoing. As I had mentioned earlier, during that ongoing stage of the third-party risk management lifecycle, you're going to be reviewing that vendor contract and as well the performance of the SLAs associated with that contract. So it is an ongoing process that will begin from the very beginning of the due diligence with the vendor, of putting the contract and the SLAs included in place, and then monitoring it on an ongoing basis throughout that vendor relationship. So just like the contract management process, putting the SLAs in place is not a one and done process either. SLAs are not one size fits all. An SLA is truly dependent upon you, your vendor, and the solution that you are purchasing from that vendor, or solutions. You could be purchasing multiple. The information that you gather in your initial due diligence review will help you put these SLAs together, because remember, you probably identified some risks during that initial review, And you will want to make sure that you address them not only in the contract, but in the SLAs as well. There are so many ways that SLAs can be tailored to fit the product or the service. For example, if it's a call center, the SL language may include verbiage around reporting on speed of answer, answer rate, or abandon rate. If it's a vendor providing you some core processing, the language may be tailored around reporting on accuracy and availability or uptime. If it is a hosted solution, you're definitely going to be looking for an uptime SLA, as well as how defects will be managed and the handling of those defects. And really, for any solution where your customer is being impacted, you might even want to include a minimum client satisfaction rate. The most important thing to note here is that, again, as I said, one size SLAs do not fit all. It's a very customized document. You may have a shell of an SLA that you want to start with all of your vendors, but it should be customized to the specific vendor and product or products. And if you happen to have a vendor relationship where you have multiple products with that vendor, very likely the case, then there's a chance that you will have different SLAs with that vendor that are specific to the product. So let's talk about some things to do if an SLA is broken. And unfortunately, there will be times that it is. It's just the way of life, basically. First and foremost, you do want to act quickly. And again, you also want to make sure you're monitoring the performance of these SLAs so that you know when an SLA is not met. But you want to act quickly. You want to have ongoing communications open with your vendor so that you can discuss things like that. And the chances are it was a rare situation, a blip in their service, something that is recoverable, and that relationship with that vendor is still in good shape, and maybe you had a penalty that you received because of that one miss, and then everything goes about their business. But there could be times when it's an ongoing performance, or the miss is so significant that it requires something more than just a penalty assessed. In those instances, it may be necessary to actually exit the relationship. Again, that would be severe and something that would be, where you weren't able to work out or resolve the issues associated with whatever the SLA miss is. But in the event that it does get to that, then know that hopefully when you put that SLA in place, it included that language that allowed that exit to occur. So I've said this a few times already, but contract management does not end when the contract is signed. I'm sure many of us have been guilty of this in the past. It's easy to select that vendor, sign that contract, put it away, and go about your business. But just know that as a best practice, third-party risk management, as well as a regulatory requirement for many, you as well, credit unions as well through the NCUA, monitoring that contract is just as important as monitoring your vendor during the lifetime of the vendor and the contract. So we're going to take a look at some ways to do that next. So here are a few ways to conduct that ongoing vendor contract management. One is tracking those renewal dates and knowing very clearly what your automatic renewal requirements are, if there are any, and what the notification period is around that, as well as scheduling regular meetings to address that service delivery and expectation and delivery that we talked about with SLAs. And maybe it's not even associated with SLAs, just the performance of the vendor in general. You should have ongoing regular quarterly business reviews with that vendor to stay on track with the relationship and the performance, again, of both sides. As well, again, tracking that performance against any penalties that are associated with that performance. That's part of ongoing vendor contract management as well. And identifying any contract gaps that need to be remediated or changed or modified before the renewal of that relationship with that particular contract. This is where I had mentioned previously modifications may be necessary. Maybe these privacy laws are popping up and it's time to add some additional privacy language into the contract as a requirement or best practice, either one. But these are some specific tasks that need to be performed as part of ongoing vendor contract management.
Our last poll question of the day is, to what extent do you perform ongoing monitoring or oversight of your contracts? As part of ongoing monitoring of the vendor, risk assessment, review of due diligence documentation, only when a vendor is not performing, only upon contract renewal, never, or you're not sure? And Kelly, let's go ahead and answer another question from the audience. And that question is, should my contracts for my low-risk vendors be different than my contracts for my critical or high-risk vendors?
Chances are there are definitely going to be differences. And I had mentioned in some of the previous slides that there are those critical elements or essential elements, let me call them that, essential elements that need to be included in all contracts, regardless of the criticality or the risk associated with that vendor. And then as your risk increases and the criticality increases with that vendor, certainly there are going to be some different provisions that need to be included. So if you just naturally think of it that way, then your contract for your less risky vendors that are not critical to your organization can be the simpler contracts that likely doesn't have an SLA associated with it, likely doesn't have any exhibits, likely just has those essential elements and not any of the the elements that are more related to high risk and critical vendors. So yes, from my perspective, there can be a difference between the contracts.
And here are those results. Thank you to everyone for answering this question. It's always interesting to see what everyone says. Also, I'd like to mention that you'll find our How to Master Vendor Contract Management ebook in the related content widget. This ebook walks you through in detail vendor contract management steps to be aware of. Kelly, I'll pass it back to you.
Let's talk specifically about some regulations as we wind down this webinar. So in general, third-party risk management regulatory oversight, credit unions first look to the NCUA, the National Credit Union Administration. A few guidances to review here include the SL number 707-01. This is a good foundation. It's kind of old, but it's still a good foundation for third-party risk management. It includes information on risk assessment, due diligence, and contract management. It also helps provide you some guidance on exam procedures. Another guidance to review is 08-CU-09, and this one actually provides a third-party questionnaire that will provide you guidance on how the NCUA will examine your relationship with those third-party relationships. So those two are good ones to review specifically with the NCUA. The FFIEC is another regulatory oversight for credit unions as well as banks. And for those of you who may not know, the FFIEC is a regulatory body where all financial regulators have a seat and where they compare best practices and promote conformity across them. In addition, it's best practice to review the guidance set forth by the OCC and the FDIC. The financial institution regulators all look to one another. So when one changes, the chances are the others will as well. So don't only rely on the NCUA as the so what on this page. So as the regulations specifically relate to contract management, I want to call your attention to 4 that I've listed on this page. First is the NCUA letter 07-CU-13. Questions 38 through 56 specifically address contract issues and legal review. And there is also a thorough checklist of what needs to be included in each vendor contract. So straight away, that's your place to start. As well, the FFIEC IT Examination Handbook outlines outsourcing technology services, which includes contract management requirements as well. So credit unions, again, specifically fall under NCUA and are also managed via the FFIEC relationship of all financial institution regulators. And then, of course, if you are have oversight by the FDIC, which I'm sure the majority of you do, then there is the Financial Institution Letter 44-2008. And this as well provides guidance for managing third-party risk and includes contract structuring and review. So again, 3 places right there for you to spend some time reviewing to ensure that your contracts are including all the requirements that it should include and that you're managing it appropriately. And then last but not least, you can review the OCC Model Risk Management Handbook. All of these 4 that I have mentioned here will lead you down the right path, the best practices path, the path that your regulators are going to be looking for, and they all lead in the same direction. I also want to bring your attention to an ebook that VinMinder released on this past Friday, June 2nd. I think that was the date. It's called Guidance and Regulations on Third-Party Risk Management. It is packed full of content and references, just like above, that are specific regulatory guidance for you to review and follow. You can download this ebook right here from this webinar from the Related Contents widget. And if you don't have a chance to do it now, then you can always get that on our website, or you can send us a note and ask for it, and we'll be glad to give it to you. So let's end today's webinar by just reviewing these best practices for vendor contracts and SLA management for your credit union. One is, again, clearly define the contract signing authority and establish that process in your governance documents. Plan the negotiation and the strategy of the contract, including who needs to be involved in that. Manage the risks that were identified in that initial due diligence. Be sure to cover those in the contract. Understand all termination rights, including those around noncompliance, breach notifications, etc. Use a reliable tool or solution for contract storage and for tracking those renewal, auto-renewal, or renewal dates and expiration dates, and make sure that the SLA is as straightforward as possible, removing any ambiguities and clearly defining how it will be measured. Monitor those the vendor's performance to those SLAs and to the other contract terms that we mentioned that may not be specifically part of that SLA. And make sure that procedures for dispute resolution are clearly defined within the contract, as well as the SLAs, and understand that contract management does not end with the signing of the contract. And that will do it for me, and I will turn it back over to you, Abby.
Great. Thanks so much, Kelly. Before we dive into more questions and answers, I want to thank everyone for attending. I would also like to thank Kelly for her time and for sharing some really important information. On your screen now, you will see our upcoming webinars. On June 13th, The Basics of Vendor Business Continuity, Disaster Recovery, and Pandemic Plans webinar. And on June 15th, our How to Review Your Vendors Business Continuity, Disaster Recovery, and Pandemic Plans webinar. We hope that you will be able to join us for those sessions as well. A link to register for those sessions is in your copy of today's presentation slides. Let's now go ahead and answer some more questions that have come in during this session. Okay, Kelly, the next question I have here is, how do you manage SLAs?
Well, the first critical piece about managing SLAs is knowing which contracts have SLAs. That's the first place to start, since we talked about not all contracts probably have them. But then is making sure that someone is assigned the responsibility to manage and own the performance of that vendor and the product that that vendor or service that that vendor is, that you're running with that vendor. It's real easy, you know, that if nobody's assigned it or nobody thinks they have the or is specifically tasked with the responsibility, then maybe nobody realizes that it's theirs to do. So I'd say those are the two critical pieces. Know what contracts have it so that you have them identified, and then make sure that somebody, a person, is tasked with the responsibility of monitoring those SLAs. And then from there, they need to know what needs to be monitored. You know, make sure they truly understand the SLA. Like I talked about, it can be complicated, an SLA is, so make sure that it's as simple as possible. You understand what reporting is necessary to manage that SLA. Who's doing what? Do you have to ask for information from the vendor? Does the vendor, are they required to send it to you? I mean, there's all those fine details that are necessary to make sure that an SLA is managed as tightly as it should be managed.
Awesome. Thanks so much. The next question I have here is there a risk of putting audit rights in a contract and then not performing the audit?
Well, first of all, let me say I'm not legal counsel, so my response is coming from just my perspective of having worked with contracts that have audit language in it. We had several contracts with our customers and with our vendors, partners, that include audit language that has never been acted on. So from my personal experience with that, it's okay for it to be in there. It's a, it's a safety net to have that in the contract in the event that the relationship or the performance started to turn sour. Then it's good to have that kind of safety language in there. Now, somebody else could come behind me and completely disagree with that statement and say that if you're going to put it in there, you should actually ensure that the audit is performed annually, so that there's no chance for disputing that value of that language should you ever do have to use it later down the road. There's probably that side of that answer too. But from my perspective, I've been involved with many contracts where that language is included where it's never been acted on.
Great. Thanks so much, Kelly. I think we've got time for one more quick question here. And that question is, we have a template that legal created that is used to send vendors when a contract is ended. Who is responsible for following up with that vendor? The business unit, vendor management, etc.?
Well, that's going to depend on your credit union, because you probably have that, or you should have those kinds of details identified in your governance documents, probably your program document. But regardless of whom it is, whatever department it is, whoever is tasked with that responsibility, if it is indicated as part of the process that is to occur based on how you've set aside your third-party risk management program, then it needs to happen, regardless of who it comes from. So really, it just needs to be lined up with your governance documents, and it could be whomever you decide.
Great. Thanks so much, Kelly. Unfortunately, that is all of the time that we have left for questions today. Thank you again, Kelly, for taking the time to address some of those that came in. Any questions we did not have time to answer today, we will address them with you offline. We would like to thank you all for attending and hope you found today's session valuable. A big thank you to Kelly as well for her time and great content. And ask even more questions inside of our third-party think tank, an online community that is dedicated to third-party risk professionals and free to join. Just because today's session has ended doesn't mean the conversations and questions must. Post your questions at thirdpartythinktank.com and see what your peers have to say. In the community, you'll find thousands of free educational resources related to vendor contract management to assist you. If you would like to become a member of the Third Party Think Tank, you can register on the site or shoot us an email and we'll get you registered and send you a link to set your password. We did record today's session, and that recording link will be provided to you in a follow-up email that you will receive tomorrow afternoon. Also within that follow-up email will be the survey link for you to request the CPE credit. On behalf of VenMinder, it has been a pleasure. Thank you, and have a great rest of your day.